This is not financial advice. I'm recording my thoughts about CrowdStrike, which operates in the cybersecurity space. CrowdStrike is one of the leaders in the cybersecurity space, but it's not devoid of competition. CrowdStrike competes with the likes of Microsoft, SentinelOne, McAfee, and Palo Alto Networks, which are also very reputable companies. The customers of CrowdStrike love them. This is evident based on their industry-leading retention rates and revenue growth rate. When I look into the stock price, it's currently trading at about $163 with a market cap of about $38 billion. But when I look into the past 12 months, they only made about $1.6 billion of revenue. That represents the price to sales of about 23. So that is extremely expensive. That is ridiculously expensive. When I look into the net income, it's in the negative territory, which is expected for a growth stock like CrowdStrike. But we are hoping that they would make positive net income in the coming 3 to 4 years. In 2021, CrowdStrike made about $1.5 billion of revenue. If you look into the revenue growth rates, they grew more than 60% in 2021. And even if you look into the past 3 or 4 quarters, they grew north of 60% in revenue, which is phenomenal. But in the financial year of 2022, CrowdStrike is saying they can only grow 50%. In other words, since they made $1.5 billion of revenue in 2021, in 2022, they're planning to make about $2.2 billion. So we do know that this is an expensive stock, right? But let's look at 2025 projections to see if we can make money. Maybe this is a high growth stock, right? So maybe we can make money even though it is an expensive buy at $163. So let's look at its evaluation in 2025. I tried to look at the revenue projections for this company, but I found different numbers. So I want to do evaluation with all those numbers. To start with, the analysts are saying that they can make $3.8 billion of revenue in 2025. That only represents about 38% year-on-year growth, right? So that's what the analysts are thinking. But let's see what the management is thinking. The management is saying they can make $5 billion in 2025. CrowdStrike's management projection of $5 billion of revenue in 2025 indicates that they are not confident they can grow at a faster rate in the next few years, which is anticipated because as the company grows, it's hard to grow. But whoever is buying now at $163 is a CrowdStrike bull, right? And they may be thinking that the management is wrong. So I'm going to make a third evaluation for a CrowdStrike bull who is buying at this price of $163 because they think probably the management is wrong. They are underestimating, right? So I'm going to assume 50% growth rate in the next 4 years for the CrowdStrike bulls who are buying at this price. So I have included a graphic here. In 2025, I'm considering 3 different revenues, 3.8 billion by the analysts, 5 billion by the management, and 7.5 billion for the people who are buying right now, which I think is extremely unrealistic, but I'm just going to add it anyway. CrowdStrike's gross margins are in the order of 75 to 80%, so it's not unreasonable to assume a 30% net profit margin. So I apply this 30% net profit margins to all the 3 revenue projections, which will yield in 1 billion, 1.5 billion, and 2.25 billion net incomes respectively. So now I'm going to think about a multiple. So if I go with the analyst's case, this is a company that's growing at about 38% and has a net profit margin of 30%, right? So I can only give a 25 multiple. But I'm going to be generous and I'm just going to assign a 30 multiple for this. And I'm going to do the same for the rest of the cases. So in 2025, the total market cap with a multiple of 30 would be about $30 billion with the analyst's case, $45 billion for the management case, and $67.5 billion for this unlikely bull case for the people who are buying right now. So this translates to a stock price of $130 per the analyst's projection. But wait, the stock is already $160, right? So if you go with the analyst's projection, you're going to lose $30 in 4 years. So that's a disaster, right? But let's look at the management's case. So if you go with the management's case, and if you believe in the management, you're going to end up with a $190 stock price. But the stock is at 160, so that's less than 20% gain in 4 years if you go with the management's projections, right? So it's not at all attractive. But let's go with the final very unlikely case for the bulls, right? So that's going to yield $284. That's about 80% upside from the current $160. So here are my thoughts. I'm going to go with the management's case because it's their projection and they're responsible to execute it, right? So I don't think they will give unreasonable projections. So if I go with management's case, it's about $190, which represents about 20% gain in 4 years, which is not at all attractive. So I'm not going to touch CrowdStrike at $160 at all. But I do like CrowdStrike as a company and I would love to own its stock, right? But its valuation is ridiculous at this point for me. So even though I'm tempted to own this company, I cannot buy the stock at $160. I may be able to consider this when it goes under 130, in which case I'm looking at least like a 60-70% upside, right? So then I can play for a better reward, right? So I made the unlikely bull case just for the bulls who are buying the stock at this point to see how ridiculous the projections are. And if you're a bull, maybe you're right. Maybe they will grow more than 50% year on year. Maybe the management is underestimating, right? But thinking that the management is underestimating their growth is not actually a good strategy.